Yes people, I hope that you're all doing well. Welcome to this video. It's going to be a little bit of a different one. You might have noticed I've got my mum with me today. So the plan for this video is to basically proxy through my mum, teach my mum how to trade, so that then hopefully you guys can get a good grasp of it. And yeah, I mean, you're not someone that's really been very good with graphs or numbers or anything like that, have you? So
No.
I think yeah, if you can pick up on it, then everyone else should be alright as well.
Yes. You're not being rude if you say, if I can teach you, I can teach everybody. I know that's what you wanted to say.
Okay.
No, but yes, absolutely. I have no idea what any of this is.
Okay, so what I'm going to start off with is show you this chart that we've got on screen here. So this is probably quite different to any charts you've looked at before, or any graphs or anything. So when you look at this, what's the first thing you kind of see?
The months going along the bottom.
Okay.
The numbers going down the side.
Yep.
That seem to be going up in increments of 50s. And I can see like US dollar written here and there. Yeah.
Okay, great. So this chart that we're looking at now is gold to US dollar. So it's the price of an ounce of gold in US dollars. And you're right, we've got the time, or the like days, kind of along this bottom x-axis.
Okay.
And then along this y-axis here, we've then got the price of it in dollars. So if the graph's moving up, then we've got the price of gold, an ounce of gold, moving up.
Okay.
That all makes sense?
Yes.
Okay, great. So what I will just quickly do is I will just move it back to what might be a bit more of a normal kind of graph, just with these lines here.
Yes.
And then you see how we've got these dots here?
Yeah.
That are kind of in relatively regular intervals with the line between them. So these right now are for each day. So for each day there's a new dot.
Oh, okay.
And then it will show the line between those for the price difference between one date to the next.
Right.
So right now we're hovering over Wednesday the 11th, Wednesday the 12th, 13th, 14th.
Right.
So this is cool. You can see some stuff from this, but there's a couple things that this doesn't really show you. So from here you can't tell where price really started the day, where price ended the day. You can't tell the highest price that it went to in the day or the lowest price, because it's not like price is just going to move every day. You know, the price of gold is going to be constantly moving second to second. So sure, if we take this Wednesday the 4th, sure, price might have ended up here, but at one point on Wednesday the 4th it could have been up here, it could have been down there, and we just wouldn't really know.
Oh, I see.
Does that make sense?
Yeah.
So that's then why we use this chart. So this is called a candlestick chart. Each of these kind of rectangles with the sticks coming out at the end are called candles. The big thick parts of them are called the bodies of the candles.
Yeah.
And then the little sticky bits that come out on either side are called the wicks. So right now I've actually got this set up in a way that might be a little bit confusing colour scheme wise, so I will actually just move that back to that. So the red candles, you might notice, tend to be going down, and then the green candles, they're always going down, and then the green candles will always be going up.
Okay.
So then what that means is that in that particular day, if it's a green candle, price is higher than it was at the start of the day.
Right.
And then if it's a red candle, price would then be lower than it was at the start of the day.
Right, okay.
So that's already a little bit more information than we've got from the other charts.
Yeah.
But you're probably looking at this and going, right, why are there bodies, why are there wicks? That kind of thing. What are they for and what do they show, maybe?
Yes, I am. And I'm also wondering, is there a start to a day and an end to a day then? It doesn't run 24/7?
It pretty much does.
Oh, so it's from 12 till 12 almost?
Yeah.
Okay.
Yeah, midnight to midnight kind of thing.
Right.
So, what if I just, what we're looking at here, so the body
Yeah.
that will show the difference between where it was at one midnight to the next midnight, if that makes sense, the start of the day to the end of the day.
Yep.
And so if that's a green candle, that then means, since green candles are always going up,
Yep.
that the bottom is going to be the start of the day, and then the top is going to be the end of the day because it's moved up in that time.
Yeah.
If that will make sense.
Yeah.
And then red's going to be the opposite, so then you've got the top of the candle would be the start of the day, and then where it's dropped, the end of the candle will be at the bottom.
Right.
So then, like I say, then you can kind of start to see, okay, so it started on here on the 8th of August, started down here at the bottom,
Yes.
and then it moved up. If I just grab a little arrow here, then that moved up there. Then the next day moved up a little bit more. Next day moved up, moved down, you know?
Yes.
So then we come to the wicks. So this means that now we can see where price moved from the start of the day to the end of the day, but we still haven't really seen what happened in between that time.
Oh, okay.
So this is what the wicks are for. So the wicks will then show you the highest point and the lowest point the price moved within that day.
In that day. Right.
I will just mention as well that we don't have to look at it in days. We can change it to 4 hour, hourly, however often you want really. But we'll keep it on the daily, just to keep it simple for now.
Yeah.
Wow. So, does that all make sense so far?
Yeah.
Got any questions?
Yeah, no, it's brilliant. I always wondered what these candles and wicks were that you're talking about.
Yeah, so it's and it is really important to know, because say if you had price up at the top of that level there,
Yeah.
you know, that could be quite a substantial difference in your account. And if you think the price only moved to there versus it moving through there, that could be the difference between a winning trade and a losing trade.
Right.
You know, so you do need to know when price has moved up and down and that kind of thing.
Right.
But again, that's not too important just yet.
Yeah.
What I will actually do is I will try and show you, trying to think of the best way to do this. I will try and show you just some smaller candles, just so then you can see a little bit more of an example of how the wicks work.
Okay.
So now this is Monday the 30th, and if I've just drawn that line just so we can find Monday the 30th easy. You don't need to worry about how I did that or anything. So you can kind of see there.
Yes. So I don't know why I took such a deep breath then.
No, you're fine. So if we look, so we've got Monday the 30th there, and then that goes all the way in here until there, and then then we've got the 1st of October there. So all of this happened between Monday the 30th to the 1st of October, and right now we're looking at it, so every candle's 15 minutes rather than a full day.
Wow.
Yeah, and again, they've still got the wicks, they've still got the bodies like everything else.
Yeah.
But now you'll be able to see a little bit more about why that forms where it does. So again, if I put a little line there just to show that's right at the top of where price went on that Monday.
Yeah.
And then that's right at the bottom of where price went on that Monday.
Yeah.
And then I move that back to the daily chart and then find wherever I was. You can then see that once I get rid of that, get rid of that, that is then exactly where the wicks form on that daily candle we were looking at before.
I see, yeah.
Makes sense?
Yep.
Okay, great. So, I'm glad that we've got the kind of basics of the charts underway, but realistically, people want to trade to make money.
Yeah.
You know, so that's what we really want to be looking at. You know, we can look at charts all day, but if it doesn't make us any money, then there's no point. So, on this website, this is on TradingView, by the way, which will be the best place if you want to look at charts. It's kind of what everyone uses. TradingView.com. On this, there are some little tools that you can use. Long position and short position. So long position basically means you buy short position is kind of like selling. So you can make money from buying and selling when it comes to trading, because what you've got to remember is that we're trading gold to US dollar. So imagine that you had a load of gold and you had a load of US dollar, and then you wanted to make sure that by the end of the day you've got the most possible value of both by the end of the day.
Right.
So what you can do if you think gold is going to go up, you can then take some of your US dollar, move it into gold, and then if the price of gold moves up, you can then change it back into US dollar if you want, and then at the end of the day you've got more US dollars than you did at the start of the day.
Right.
But you can also do it the other way around. Say if you had a load of gold and you think gold's going to go down, you could then go and sell all your gold for US dollars, wait for the price of gold to go down, and then buy the gold back.
Yes.
And that is basically how it works when it comes to buying and selling
Wow.
trading. That makes sense?
Yes.
Cool. So, if I bring these back, so the long position is the buy position. So if I was to show you this, what we've got here is just a tool that you would use to look at how you would buy gold if you wanted to buy gold.
Okay.
So say that you did buy gold right at the end of Monday the 30th of September.
Okay.
That little grey line along the middle,
Yeah.
that shows where you've brought it.
Okay.
Now you don't have to buy it there, you can buy it wherever you like and you can just drag it using those dots. But let's just say for this example that we brought right there.
Okay.
Now this red box at the bottom, this is what we call our stop loss. So it's always good when you're buying, investing, anything, to have an idea of, if I lose a certain amount of money, I'm going to call it quits.
Yeah.
Because no one's right all the time. So
Yeah.
we don't want to go and bet a whole account on one trade.
Yeah.
So this would then be where you go, okay, when it gets to this point down here, I've had enough.
Yes.
That's my money gone. Or a certain amount of my money gone.
Yes. I'm
We'll
not
move on to the
prepared
next
to
trade.
risk anymore.
Yeah,
Yeah.
exactly.
Okay.
And again, you can have that as high or as low as you like.
Okay.
Then this is your take profit. So the same way that you need to know how much you're willing to lose, you also want to know how much that you want to gain.
Yes.
Because otherwise, price could carry on going up and up and up forever. But if you never actually take your money out, then there's no point.
Right. Yes. Okay.
So, in this example, say that we brought in here, we'd set our stop loss just at this line, roughly, just as a random little example.
Okay.
And then we'll set this to where that top of that wick is. And then say that you'd entered this trade and you'd said, I'm willing, to risk a tenner. If that goes down there, I've lost a tenner.
Yeah.
Then you can then look at this and then go risk to reward ratio. So that means that your risk is going to be 1, but your reward in this case is 3.5 times that.
Right.
So if you're risking a tenner on it going down,
Yeah.
your reward could be 35 quid. So it's 3.5 times what you're risking.
Oh.
And you'll notice if I move that down, that'll go down. If I move that up, that'll go up. And the same is also true if I move this. Because if I'm risking less, my risk to reward is higher. Does that make sense?
So if you're risking less, your risk to reward goes higher.
Yeah. Yeah. But it but a lot of the time the way that I would do it is I'd say no matter how far it goes down on the charts,
Yeah.
I would work it out so that I'd work out how much I'm willing to lose first before I look at the charts.
Okay.
So if I'm willing to lose a tenner, I'm always willing to lose a tenner, whether that goes down to there or whether that goes down to there, whatever I set it at, that will still be a tenner.
Right.
So that is why sometimes you do want to have it a little bit tighter, because because you might say that you've got a tenner there and then you're getting 53 quid out, basically, because I'm still going to risk a tenner for that amount no matter what. You could be safe down there and risk a tenner on that, and then you're getting half as much back, but you're safer. Does that make sense, or I lost you a little bit?
It is losing me a little bit, yeah.
Okay, cool.
Yeah, what do you mean cool?
Well, not cool, but you know what I mean.
So I don't understand how when it goes down,
Yeah.
your risk to reward goes up.
Okay, so if I...
Because the numbers went red, didn't they? So that would be a bad move kind of thing. So
Okay, so you don't need to worry about that. The only reason why it went red there
yeah.
is because of that wick. So this is something that you would play out live as it happened.
Right.
So that went red because, as far as the chart's concerned, I brought on Monday the 30th of September
Yeah.
there, but price actually dropped below where my stop loss would be if I had it that tight.
Yes.
Do you see what I mean? Where that wick is,
Yeah.
if I would have brought there, then that would have hit my stop loss and that would have been a losing trade. And that's why this bit's also green, like a darker shade of green, because price has moved up by that much.
Got ya.
Does that make sense?
I think so.
But we're still not too sure about how you can risk different amounts from, or risk the same amount from a different amount of the chart. Is that kind of what we're thinking about? So the way to think of that is to think of how much gold you're buying.
Okay.
So say if I'm buying gold, I could work out that I'm going to buy a kilo of gold,
Right.
and then if it drops to a certain amount, I've lost a tenner. Or I could work out that I'm going to buy half a kilo of gold, and then if it drops, I've still lost a tenner because I've let it drop more.
Further. Okay.
Do you know what I mean? If
Yeah.
it drops twice as much, but you've put less on the table,
Yes.
then it's still going to be the same amount.
Yes.
You know?
That makes sense.
Okay, great.
Right.
And then I'll just quickly go through the same on the other side. So short position would be a sell position. I've got that set up to my weird colour scheme as well, so I'll move that back to green and red. So like I say, we could then move our gold into US dollars and then sell the market as well and bet on it going down. That then means that if price moves up, we've then effectively got to buy our gold back at a higher price, so we've lost money. See what I mean? If I've sold my gold in the hopes of buying it back later, but prices went up, I've then effectively lost money. And that's roughly how it works. So we've sold gold here. We've said if price gets to this much, I'm just going to buy my gold back because I want my gold anyway, and I can't afford to buy it back any higher than that.
Okay.
So I'll spend an extra tenner on my gold if I have to, but ideally that will go down and I'll buy it back down here, for example.
Yes.
And then if I've risked a tenner, I might have made £22 there. So it's a 2.21 risk to reward. Does that all make sense?
Yes.
Okay, great. Have you got any questions or anything about the things that we've been over so far?
No, I don't think so. I don't think so. I think it will be a lot clearer once you're doing it. Because I've understood everything that you've said, but then for me to be able to explain it, you know, or actually really know that I've grasped it, I think I'd need to go over it again a couple of times with you.
Okay, cool. Well, we can do that.
Awesome.
What I'll try and do as well is I'll try and re-record this on a different day. The markets are actually closed over the weekend, and we are filming this on a Sunday, so I can't really show you price moving live as it's happening, but we'll try and get some footage and go over that when price is actually moving, and then potentially in the next video I'll show you guys how to actually place a trade on your account, and then from there we should be up and rolling. So thanks for watching this video, guys. I hope that you enjoyed it. I know it's a little bit of a different format to how I normally do it, but hopefully this makes it a little bit more relatable and something that people can understand a bit easier. So yeah, please do let me know what you think in the comments, and I'll see you guys next week.